Hello everyone. Children, in today's video, we will discuss about the third chapter of economics, that is money and credit. Children, in this chapter we will discuss about the sources of money or the sources of fund arranged by different business entrepreneurs and the rural people and the farmers, etc. In this chapter, first let's discuss about two different credit situations. How a credit sometimes help a businessman and sometimes put a businessman or a farmer into a debt trap. There are two examples in front of you. First is the example of Salim. Second is the example of Swapna. Salim is a shoe manufacturer and he used to make shoes. He took some amount on credit and complete his order and earns the profit. So in this way, credit helps Salim in his business. Next is the example of Swapna. Swapna is a small farmer. She took loan from a large farmer and due to the weather adversity, her crop failure was there and she get involved into a debt trap. So credit is good, but it should be taken wisely. Now we will discuss about the terms of credit. What are the terms of credit? Collateral security, documentation required, terms of the loan, mode of repayment, rate of interest. What is collateral security? Collaterals are taken by the banks or by the money lenders from the people. People used to give some physical asset as a guarantee of their loan. That is called collateral. Next is sources of credit. There are two sources of credit, children. First is informal source, second is formal source. First, we will discuss about the formal source. Formal sources are government-owned institutions, commercial banks, regional banks, etc. Cooperative societies are also part of it. Next is informal source. Informal source are the sources which are taken from family members, friends, money lenders, etc. Children, in our country, India, as you can see, that maximum loan is taken by the informal sources. Formal sources are sources of credit which are taken by the banks or the cooperative societies. In this particular source, the source of loans is governed by the Reserve Bank of India, means the banks. Rate of interest is low and the people used to give the credit while taking care of the needs of people as well. What it means is they provide cheap and affordable credit to both rural and urban areas. Next is informal sources. As I already told you, informal sources of credit are given by money lenders, traders, employers, etc. There is no organization who check their business or who check their working. So what it means that there is no defined rate of interest, there is no defined tenure. They people can harass you even to get their money back. Rate of interest, it depends upon the choice of money lenders. Informal sources of credit are flexible in terms of credit. They generally charge higher rate of interest and they do not think about the people to whom they are giving loans. Now in this particular web chart, we can see that how the sources of credit are differentiated. Money lenders, traders, other cooperative societies, banks. But children, in our country, most of the rural people, they used to take loan from the money lenders and from someone else rather than going to a formal source. Importance of credit for farmers in rural areas. In our country, India, 70% of the population, they people are farmers. As we all know, we have already studied it in many of the chapters. Farmers are the poor people who generally required loan. They need credit to buy their agricultural inputs. Agricultural input means to buy their seeds, fertilizers, pesticides, electricity, equipments, etc. And they people require the loans at lower rate of interest but the money lenders to whom they people are approaching, they people generally charge very high rate of interest. So that is why most of the Indian farmers, they get involved into a debt trap. Okay, the people used to take loans at the beginning of their sowing season, and if in any case the crop failure is there, where the situations are not appropriate, then the people usually suffers for the whole year, like I've already told you in the example of Swapna in the beginning of the chapter. Why are the banks not advancing loans to the poor people? Poor people, they require more loans for their business, for their agriculture purposes, but the formal sources, which are the most uh, well organized sources for the credit, they people are not ready to give loans to the poor people. Now, what are the reasons behind that, children? Poor people they do not have any collateral security. They do not have any physical asset like buildings, vehicles, jewelry, land, which they can put as a collateral, as a physical guarantee to the bank. Banks are not available in many of the rural areas. There are many areas in which banks are not there. Though in nowadays in many of the rural areas of our country, Grameen banks are there, but still some lacking is there. Banks do not consider the poor people as credit worthy. The people do not think that the poor people should be given loan and they will be giving the loan back at the appropriate time. Poor and ignorant people find it difficult to produce the needed documents. The most important thing is the lack of documentation. They people are not able to provide the documentations which banks require, which means that lack of education is again a very big reason that they people are not able to get the loans from the banks. Higher cost of borrowing means a larger part of the earnings of the borrower is used to repay the loan. Children, we all know that the farmers who are taking loans from the money lenders, they have to pay a very high rate of interest, and this is the reason that they people are not able to pay the principal amount on time, and for the whole life we can say they people get involved into a debt trap, and the people are just giving the interest, and at the end of life they people are just giving this thing to their children, or generally we hear in the news also that farmers are committing suicide as they are not able to pay their loans, like this. So for this reason, banks and cooperative societies, they should think about this thing. This is a matter of concern that they should lend more and more loans to the poor people or to the farmers of our country, so that they can set up their business, so that they can start with some other small scale manufacturing industries and all. Now we will discuss about self-help groups. Self-help groups, as the name itself is explaining its meaning, that if nobody is there to help the farmers, they people have started something to help each other. That is self-help groups. As you can see in the pictures also, the people are making some things and they are just selling those things in the market. A self-help group is generally set up in the rural areas. Okay, this particular group is set up by the women of that village, and generally 15 to 20 members are there. The women of that particular village, they used to form a group, and they just start collecting 15, 20, 25 to 100 rupees per month, and in the time of need, when any of the member of the group, they people need some money, they used to lend that collected amount to the particular person, and they used to give the amount on a very low rate of interest, basically. So this is self-help group. After 2 years of smooth functioning, a self-help group can register themselves with a bank also, and with the name of the group, the bank can lend loans to the group. Okay, but the whole group is liable to pay the loan back to the bank. Self-help groups is a very good step which is taken by the poor people of villages, that they people get loans at a very low rate of interest. they people are getting encouraged, the people start getting employments, means with the loans the people have started with some businesses or something like. And most of the thing, the women are getting more extrovert. They just held a the meetings of self-help groups, they held at every few interval, and they can discuss and act on many social issues like health, nutrition, domestic violence, etc. Banks should pay the loans to the self-help groups without any collateral, because there are so many people involved who are taking the liability to pay back the loan.